Hey everyone, welcome to the Epps School of Real Estate, where we are all talking all things real estate.
All day real estate. Let's go, go.
I'm Trinity Epps, aka the CEO.
And I am Dominick Epps Sr., aka the People's Agent.
So today we are talking about tax assessment. That's a big word, so let's talk about it and then break it down.
Uh,
Tax assessments is the process by which the value of a property or asset is determined.
Great job. Great job. Great job. So, we're talking about tax assessments today, and we're going to talk about how your local government determines how much your property is worth. Now, please understand, okay, this is tax assessments, and this is what the local government use to determine how much you should pay taxes on your real property. It involves evaluating the market value of the property, which can include land, buildings, and other assets. Tax assessors, often employed by local governments, use various methods such as the sales comparison, income analysis, and cost approach to estimate your property's value. What you think? Good?
Mhm.
All right, cool.
The asset value of the property is not the appraised value of the property. That that's another video.
So the assessed value of a property is not the same thing as the appraised value of a property. Okay, I want to make sure I say it one more time. The assessed value of a property is not the same thing as the appraised value of the property. And property owners who intend on keeping their property can make the mistake of requesting for a higher assessment.
Like, why would someone want to give away money?
I don't know, right? Like, why would somebody just want to give away money? So, property owners pay taxes based on a certain percentage of the assessed value. That is also known as the tax rate. The goal of the tax assessment is to ensure that the properties are being taxed fairly based on their value and their characteristics. So, give us a quick break and we're going to come back and talk to you more about tax assessments.
What's this?
So, the assessment process and terminologies can vary depending on the jurisdiction and type of property that is being assessed. And so, to calculate your taxes from the tax ratio, also known as the tax rate, you generally need to follow these basic steps. Okay, so take notes, write this down. Determining the assessed value. You want to start by finding out the assessed value of your property. This value is often provided by your local tax assessor's office. You probably got something in the mail, or you can go to your local city's website as well. And then you want to know the tax ratio or the tax rate, which is the percentage or fraction that is used to calculate your property's taxes. It's set by your local government and is usually expressed as a certain number or mils, thousandth of a dollar. Then you want to calculate the property tax by multiplying the assessed value of your property by the tax ratio. And this will give you the amount of your property taxes.
So the formula is property tax equals assessed value times tax ratio, or deductions for certain situations such as being a senior citizen, having a disability, or being a veteran. If you're eligible for any of these, subtract the expectation amount of the calculated property tax.
All right. So keep in mind that tax ratios and assessment rules can vary greatly depending on your location and the type of property you own. It's a good idea to consult your local tax authority or assessor's office to get accurate and up to date information specific to your situation because what we're going over is just general, but it may change based on your city and what your city tax rate is. So what we're going to do is we're going to give you an example so you can determine how much are you actually paying this year for your city's taxes. So, all right, so what we'll do, Trini, is we'll go one more quick break, and then we'll come back and break down, give you an example to determine how much your taxes are for your property. We'll be right back. All right, so we're back, and here's the formula. We're going with your assessed value. So we're going to break it down like this. If your tax rate is $1.33, okay, it would mean for every 100 of your assessed value, you have to multiply it by $1.33. So if you have a property with an assessed value, say of $50,000, you can calculate the property tax by using this information. Property tax equals assessed value divided by 100 times $1.33. So for a property assessed at $50,000, it's going to be property tax divided by 100 times $1.33, which will equals what?
$665.
So you will have to pay $665 for that specific year for your taxes. I think we did good. Good job. Episode 1. So thank y'all so much for watching. Hey, this is the Epps School of Real Estate. I am Domenick Epps Sr., a.k.a. the People's Agent.
And I am Trinity Epps, a.k.a. the CEO.
And we'll get with y'all later. We'll talk about some appraisals, but y'all give us some thumbs up, give us some comments, and hopefully we was able to help you out. But remember, please, they can only tax you on the information that they know. So don't go call them and say that you did all these amazing upgrades unless you want to go pay more taxes. And who would want to give them more money? All right, we out.